A bit about us and where the data is coming from. So we are an independent market intelligence and research and advisory firm for student housing and other rented residential asset classes. We monitor entire global market with about 130 markets and submarkets and about 6,500 buildings in these asset classes. We're including the 100 KPIs about each city, market, and building. We have offices in Latin America, Europe, and Asia. Follow the high level of credentials of memberships that you can see, like UN and SMR. And we monitor about 700 groups in student housing and 200 portfolios globally, and working with about 30% upper market from this. Fast facts about the asset class and where we are in relation to financing and transactions. So last 5 years actually have been recording the record growth up to 16 billion investment volume per annum. You only see up to 2018, but in 2019 the volume of investments in UK and Europe and the rest of the world went from 6 billion to 10 billion. So in 2019, so it increased. So it was even greater, but we haven't completed the data yet. And in 2020, so far we are at the 10 billion investments in Europe and the rest of the world. The United States is not included in that. So transaction-wise, the asset class is still strong. It still fares constantly in top 5 investment prospect sectors out of the 23 asset classes. And demand is still growing faster than supply, even in COVID times. So arrivals might be weaker, but we have about 300,000 new students, so increasing number of students, but we have only 50,000 new beds. So 300,000 new mobile students, while only 50,000 beds per annum. So the gap is actually widening. We still have low provision rates in booming markets, especially across continental Europe or some new markets like CE, Latin America, Australia. We experienced the counter-cyclical asset class, so it's not pandemic resilient, but is less affected than other asset classes. And what we are experiencing as we are doing the occupancy check recently is that even in these times, the occupancies are doing relatively well. Later on in next slide. We have about 150 new groups investing in student housing each year now. So as we had about 450 2 years ago, we are at 700 companies. So there are new arrivals to this asset class. There is room for consolidation. So out of the 200 portfolios globally, 2/3 of them are smaller than 5,000 beds. And majority are sort of still single assets. So there is a lot of room for transactions, consolidation, and financing opportunities. And we have strong pipeline. In Europe, it's about 98,000 beds to be constructed in next 2 years. So there is a lot of new product coming to the market. And we have still quite higher initial yields than other asset classes. So the sort of yield spread in between entry and exit is somewhere in between 200 to 300 BPS in the horizons of 5 to 7 years. So it still offers relatively good opportunity for investors. Market temperature, so where we are. So looking at lettings and booking agencies reporting relatively good numbers. The arrivals and occupancies, as we have data so far, wherever the students are able to come and occupy the premises. So I'm discounting all the markets where the students cannot come. So in markets where this is feasible, the occupancies are in between 80% to 98%. Especially well is doing Germany and CEE, where the occupancies are 95 to 98%. A little bit less so the other part of Western Europe. But this asset class has been impacted a little bit less than other asset classes. Students are arriving even though the study is online, even though they have to be self-isolated or quarantined for 2 weeks, which is a little bit of a surprise, and most of the operators actually notice a little bit higher numbers than they expected back in spring. We don't see divestments. On the other hand, we see opportunistic investors and new investments in PBSA during COVID. We see a lot of online participation at student housing events. So it's almost twice or to 3 times more delegates coming to the events. Of course, it's because these are the only options, and all the webinars and sessions notice more participants. But out of the webinars that we have had the chance to monitor, probably it's one of the highest increases that we noticed. So we have seen 25 transactions this year in Europe, worth about 10 billion euros, which is more year to date, but is mostly thanks to the big close to 5 billion transaction of in the UK that happened at the beginning of the year. Overall, the transactions in terms of number of transactions are for the first half of 2020 42% down, so it's not fatal. And there are a number of deals that are elaborated these days, and that investors and banks are working on. So second half of the year, especially the end of the year, is expected to be relatively strong. This slide is to set the scene. So we plan to talk about equity and debt changes over time. So how was it in 10 years ago and now, 5 years ago and now in some markets? How is it now after COVID? How the LTVs changed? How debt and capital and debt provision is across the market? How does it vary? As well as how does it vary across the maturity of the market? So how does Poland compares to UK, let's say? And then also what is the difference in equity and debt provision when it comes to new buildings and operating asset transactions. And as mentioned, intentionally we wanted to give a view of different stakeholders from industry. So it's great that we have representative of banking, investor, institutional view, and as well as we will look at alternative like mezzanine or stock exchange. When it comes to stock exchange and going public, the industry is in a stage that we have less than 20 public companies out of the 700 and out of the 200 portfolios in an industry. So perhaps this might be one of the newly open options in this level of maturity of the market. Just to give it a hint for the panel, we have 98,000 beds coming to the market, 45,000 beds are already in construction, 53,000 to be started and concluded by 2022. We talk about 6 billion volume of investments coming to the market, and we expect about minimum 20 billion transactions in 2021 and 2022 in Europe. which represents a good food for conversation now about the debt equity and debt and financing.